Hey traders, Raghee here, and in this recap video for Simpler Futures, the question now is the Nasdaq 7,000 new record close. Now what? Now, let's backtrack a bit because I think number one, the first lesson here has to be trade what you see. And for the most part, even going into the end of 2017, I took a long Dow, so full disclosure here, I took a long Dow position into the end of the year, mainly because it tested that area around the 24,700 level once more, and it gives me less exposure to tech, and it was the more docile and probably the one index that's best positioned to continue to benefit from the tax reform narrative. I think the S&P would be next, and the Nasdaq would come in third. But nonetheless, every one of these index futures, whether that be NQ, whether that be YM, or whether that be the ES, every one of them has consistently been printing, in the case of the YM and the ES, nothing but green grab candles on the daily, and the NQs plotted a couple blues within really an overwhelming sea of green. So that tells me that there's a little bit more of a neutral sentiment that's worked its way into the NAS since basically the fall trading season starting in September. But we've got a grand total of 4 blue, actually no, I take that back, 4, 5, 6, 7, 8, 9, 9 blue grab candles since September and 1 red. Everything else has been green, and everything else since the red grab candle has maintained support within the dynamic moving averages, right? So that's dynamic support as this market basically climbs stairs higher. So it's very tough to want to bet against the Nasdaq when it slips into this zone. I mean, we've seen this now 3 times, okay? This is the one that I'm most nervous about. So that's what I'm going to talk to you about here. What are the canaries in a coal mine? Please keep focusing on the long side on the longer term. Shorter term, it can be very different. Right? Shorter term, you can look for those plays where, say, Apple, Microsoft, Facebook, Google, Amazon could lead the way down. Collectively and psychologically, if Netflix, Priceline, and Nvidia have a couple rough days, especially together, that also could have a psychological bearish effect on the Nasdaq. But if you're looking for the warning, because that's really what's kept some people on the sidelines, sadly, as the chatter about the eventual rollover in the equities names increases, and I've really seen it just kind of hit a fever pitch ever since October. But the canary in a coal mine, the warning, right, would be these heavier weighted names. Now, are there a couple warnings here right now? I would have to say yes. Not enough to get me bearish, but enough to keep me wary of being too aggressively long. Both Facebook and Apple have lost the clarity of their uptrends. Google did back in here, but they've seemed to have righted the ship ever since. And Microsoft had one day, which was a great buying opportunity, and Amazon hasn't looked back. So you can start to see the heavier weighted names are losing a little bit of that traction to the upside. So that's a warning. What should that do? It should do 2 things, and this is how I would tell you to focus on the NAS going into 2018, right? As we go out of 2017, I was bullish. 2018, still bullish. So that's number 1. Okay, but I'm going to be more conservative, and that means I'm going to be looking for deeper corrections. A move lower, even a red grab candle, is not a collapse. I'm looking for deeper corrections. So I want to see likely a blue grab candle. I want to see price action into the middle of my 34 EMA wave. Okay. And I'm going to be especially alert to potential top hats on the NQ, because we've seen top hats before And you can see that here. This is my haystack layout from John's indicator. I love this indicator. This and the squeeze are real needle movers for me. The last time we had these, look out, right? You see this movement to the downside? So I'll be keeping a really close eye on movement like that. But this last move was what? It was a retracement, not a reversal. It was a correction, not a collapse, right? So I'm going to keep in mind that these are going to give me insight into these corrections that are, one, I can take advantage of intraday, and two, I can look for those longer term time frame buys, and that's what's working really well. And I'll continue to keep an eye out for them until we really stage a reversal. And that reversal is going to have to be, again, looking at some of those heavier weighted names, continuing to do what? Print not only blue, but consistent red grab candles. And until that happens, keep the bullish bias. I'll see you in the next update.